Hello, in this video, I will answer a question that have been made by my lecturer, is Dr. Budiantoro MA, to fulfill the course English for Accounting as a final exam. Okay, let's get started. Final exam English for Accounting. Number 1, give definition about accounting for cost, direct cost, and indirect cost. Direct and indirect costs are accounting concepts that help you spread expenditures that fluctuate relative to how much business you transact and costs that stay mostly the same, whether you sell one item or 1,000. Direct costs are considered direct because the expense incurred go directly into the products or services you sell. Indirect costs are indirect because they describe items necessary for running your business but not necessarily for producing your products. Number 2, give example direct cost and indirect cost. Example of direct cost. The most obvious examples of direct cost are the material that go into producing the item you sell and the labor that goes into creating it. If you manufacture clothing, the amount of fabric and thread you use will vary directly in proportion to how many shirts you make. Even if you retail items that another business manufactures, the amount of inventory you purchase will vary relative to how many items you sell. Similarly, you'll pay your employees for a greater number of hours if they make 200 shirts than if they make 20. Example of indirect cost. The rent you pay on your facility is an indirect cost because it doesn't fluctuate to your sales volume. The utilities costs you incur to keep your operation going are considered indirect costs. As well, because you have to keep your light on and your room heated whether your business is thriving or struggling. Payroll for office staff that keeps track of payroll is an indirect cost. As well, because it goes into general operation rather than specific item that you sell to generate revenue. Number 3, give summary investment in stock market. The stock market refers to public markets that exist for issuing, buying, and selling stocks that trade on a stock exchange or over the counter. Stock, also known as equities, represent fractional ownership in a company, and the stock market is a place where investors can buy and sell ownership of such investable asset. An efficiently functional stock market is considered critical to economic development as it gives companies the ability to quickly access capital from the public. Purpose of the stock market. The stock market serves two very important purposes. The first is to provide capital to companies that they can use to fund and expand their business. The secondary purpose the stock market serves is to give investors, thus who purchase stocks, the opportunity to share in the profits of publicly traded companies. Investors can profit from stock buying in one of two ways. Some stock pay regular dividends, a given amount of money per share of stock someone owns. The other way investors can profit from buying stock is by selling their stock for a profit if the stock price increases from their purchase price. Number 4. Explain the roles of accountant in globalization era. International accounting is complex because of its nature being linked to the globalization movement that is sweeping all economic. However, the globalization is affecting the accounting craft, standards, management, audit, and tax. Besides, the role of accountant in particular has become more important not only in the corporate level, but also at the national level and even more importantly in the international level. The roles of the accountant in the era of globalization is divided into two main sections. The first part discusses the definition of management, accounting, and its research. The second part discusses the globalization and its research. The third part focuses on the role of the accountants. The fourth part seeks public perception towards the accountant. And the last, give example the role of accountant in globalization era. First, strategic management. Gusten, Miller, and Pfeffer define strategic management as the process by which the leading members of an organization envision its future and develop the necessary procedures and operation to achieve that future. Susan suggests a guide to the strategic management process as following: agreement on initiation of the strategic management process, identification and clarification of the organization mission, objective and current strategies, identification of the organization's internal strengths and weaknesses, assessment of the threats and opportunities from the external environment, identification of key constituents or stakeholders and their expectations, identification of the key strategic issues confronting the organization, design or analysis or selection of strategic alternatives and options to manage issues identified. Implementation of strategy and monitoring and review of the strategy performance. Performance management, improvement and development agency define performance management as taking action in response to actual performance to make outcomes for users and the public better than they would otherwise be. So in short, we can say that performance management is the outcomes of work. Performance activity defined above is affected by a number of factors. I'm sure and parents that the following five factors: personal, leadership, team, system, and contextual or situational. And the last, managerial accounting add value to their organization by pursuing five major objectives, which are: management accountant add value to their organization by helping the top management in decision making and planning. 2. Management accountants add value to their organization by helping the top management in directing and controlling the operational activities. 3. Management accountants add value to their organization by achieving the organization goals by motivating all the employees towards the organization goals. 4. Management accountant add value to their organization by measuring the performance of activities, managers, and other employees within the organization. 5. Management accountants add value to their organization by estimating the organization's competitive position. Thank you.